The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 6th magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely believes that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstances of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, 877-927-6648. Of course, internationally or locally, if you want, 727-445-1044. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. Let's go ahead and get this show started on Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow down 49 points, trading out at 20,956. S&P down 9, trading at 2374. NDX 100 off 0.3%. Everything's off about 0.3%, give or take. 19 points to the downside inside the NDX, 27 to the downside in the composite. The Russell 2000 a week link out here off 12 points, trading at 1381. Semis are off $7 to the downside. Well, gold really we'll call it flat, and silver flat out here. They're trading at 12.25 and 17.76 respectively. Light sweet crude back 22 pennies, leading the charge out here to the upside. They're having a concert. It's Concert Pharmaceutical up 70%. And maybe that's an IPO or whatever it is. CNCE is having a good day, up $7. TG Therapeutics. Maybe there's some type of merger going on. I don't know. But maybe they've cured some disease. It's trading up at $9. That's up 85%. Crane Company, that's up a normal 4% or $3. Granger WW up 2.5%. Netflix is up 2. New Oriental Education up about $2. So the downside, Priceline. That's the big leader dollar-wise, off $7, less than 0.5%. Amazon is down $6. Intuitive Surgical jumping in on the fray, down $7 as well. Gravity Company is losing Gravity. That's down 21%. Chipotle, $4. So we've got a bunch to look at, but I want to look at what you want to look at. So we're actually going to start with Danny in Atlanta. He had requested to go take a look at platinum. We'll do that, then I'll show you what is going on inside the markets out here. But Danny is looking for a level of support inside of platinum. The question inside the Tiger's Den, in essence, was where is support? If we take a look at platinum, we can see that there was a brand new daily market profile that had formed 3 or 4 days ago. Those are the blue horizontal lines going on that are blue horizontal lines on my screen. You say, I can't see those horizontal line, Steve. So here we turn off price. Now you can. Now, here's the key, Danny. I said maybe 964.60 could be support. The problem is you had 2 profiles in a row where that point of control was close to the bottom of the box, and price is now down below that. That should have been a significant area of support for platinum. It is not. What's the next level to look at? Well, you go back to the previous swing point, that being January 19th. You look at the breakout session that occurred January 5th, January 3rd, and that says, okay, this could be an area, should be an area, may be an area of where we would get support. Now, the problem here with platinum and I don't recall if we have this with gold and silver, but we certainly do with platinum, is back as it was making its high. Looks like February 28th out here, Danny. It did form one of those TD sequential counts, number 13. That's a blue number 13 that you see on my screen out here. So that can be a significant area of could mark a decent high, just as the price relative strength divergence pattern down here back in December marked a low. So you've got two nice topping or bottoming patterns, in this case one of each, that have formed with inside of platinum. So how do you trade it at this stage? I think you have to wait to see what happens at the swing point down to the January 20th level before you do anything there. So I hope that assists you with regard to where is platinum headed. Now, let's go take a look at the markets out here. Go ahead, send me your cards, letters, post some instant messages inside the den, and I'll be happy to go take a look at whatever it is you are looking at. Now, earlier in the den today, difficult to see the full chart. I don't know what to tell you about that, Mr. Bill. We're broadcasting in HD out here. Not really sure. But in any event, let me get back to the ES Mini. There are really two patterns. You got to like it when you don't have to, but I like it when two patterns come together on two different time frames. So as these patterns were unfolding, and I can tell you, I've been looking for a place to get into a short position for the market, but I want to pull the trigger at the right time. And as the market was moving lower this morning, I said, boy, now is not the right time. You may say, what are you talking about, Steve-O? Well, if you take a look at the 2-hour chart for the ES Mini out here, and we see when it made its high out here, was making its high, doing it in key of G, the old Stevie Wonder key of G, wave number 7. Well, just so happens as the ES Mini was moving lower this morning, and we now should have, well, by 2 o'clock, we should have a confirmed 7th wave move to the downside. Worked at the top. Is it going to work here at the bottom? Well, right now, and then I had also posted, because of what this pattern had, because of what was going on a 30-minute chart, you should expect the ES Mini to get to 2374-ish. We're trading at 23.74, well, in a quarter right now. I would say that is pretty good. Now, that 23.74-ish area on this 2-hour chart is very important because that happens to be Stevie's red line. And should price close above this, in this case here, you're looking for above 23.76, that would say, hey, no reason that you should expect at least this bounce, could be a bottom, but at least you should be anticipating that price would move to the 23.83 level. So that's going to be the 23.74 is a key area for us to watch. Now, simultaneously, as that 7th wave move was forming out here, that's why you and I, we pay attention to these patterns. When the ES Mini on this 30-minute basis formed a top, one of Stevie's favorite, price moving higher, doing less relative energy, up shows the cavalry. In this case here, it was the bears, forming that nice little evening star. Now you'll see these black angular lines that form out here. These two that formed, and if you're not watching us on Tiger TV, I'll try to describe when that was. Right around, from around 11 in the morning or so on March the 2nd. First one showed up right around 3 o'clock or so on March the 2nd as well. No bullish reversal signal as that pattern was forming. The same when the pattern was forming right around 22:50 in the evening. That must have been 23 or 11 o'clock on the trading day of March the 2nd as well. Different story down here. Different story this morning at 11:30 because the bulls did rush in. And we had a nice little bullish bias market profile. This 23.74 is a very important level. Steve Rhodes with TFNN. Right. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So a little discussion inside the Tiger's Den on because I know there's going to be questions about gold and silver and so forth. And if we take a look at Pan American Silver, PAAS out here, and just to show you how these patterns work, right? We were looking at platinum as an example for Danny in Atlanta, and we identified the pattern that formed that called the top. That was a TD sequential count. Just so happens, I don't know how this works. You tell me how it works. Just so happens that is exactly what occurred out here as Pan American Silver made its ultimate high thus far back on February the 7th. So where are we at right now? Well, in the case of Pan American Silver, where we are at, if we take a look at volume today, only 1.1 million shares. So it's coming back with light volume. You say coming back into what? Well, coming back into the breakout session from the trading day of January 5th, 3.2 million shares out there. So you and I don't really even have to do the math. No, we're pulling back with light volume, and it's closing the gap. Now, the problem is, the gaps, remember, they're your friends out here. It's not really the apogee line, but let me do this here. We'll just change colors. We'll just make this. Well, let's make this yellow, a yellow belly out here. Really, price should at least close back above 1624 if you were to go ahead and have a rejection or coming back into the breakout area. So it makes this one a little bit difficult to call. Now, the reason why is because see how this thing got back inside of its TAS weekly profile? You may say, no, I don't see that, Willis. Well, let's go take a look at it. Let's go ahead. Let's turn price off. You're just going to see those green lines. Now, you are an aficionado of these TAS market profiles. And if you're looking at this weekly profile, which you and I are, you tell me who has control of the price area between 1791 and 1426. Yes, it is sellers. And they especially get to put their foot onto the pedal when you break down below that point of control. So the area to watch today, it is an important area, 1654 out here inside of Pan American Silver. Because you close below that, you close below the breakout, and anything is open and that open means moving all the way back down to about 14 and a quarter out here. There was a question inside of pass, I think, with regard to my pass. Is a price oscillator above zero? The answer is it is below zero. So that's an excellent question there, Mr. Bill. And you know that when you get a falling oscillator below zero, that's very bearish. Now, the other point, though, that Mr. Bill probably was also going to make, now I don't know if he was or he wasn't, but I'm going to make it for you, is the mere fact that, and we're seeing this amongst many of the mining equities. I'm going to give you that's the bearish side out here with regard to Pan American Silver. But as Mr. Bill is pointing out, and rightfully so, you're now getting that price oscillator, that's the bottom panel on my screen, down to the zero line. Now, what happens typically, not always, but it's a pattern that you pay attention to. When you get that crossover, that can be a pause in price. Folks, that is no different than the death cross out there, right? Many of you are familiar with the death cross. Here's the problem with trading the death cross. You go back and look at it. You go find when the 50-day simple moving average crossed the 200-day simple moving average. And when that occurs, the move is basically over. That is also where you see a pause in price. Well, it works similarly, not exactly the same, but similarly when we're taking a look at this chart out here. So we know Pan American Silver pulling back on light volume. And this could be a pause area. You should, is what I should say, what I will say, you should see a pause. And you should see Stevie's red line catch up to price. Now, you don't know if the red line is going to keep falling, price is going to move back, some combination thereof out here. But if this continues to fall, okay, and you've got the price oscillator below zero, there's nothing more bearish than a falling price oscillator. So you got two patterns out here that say we must keep our eyes open because you've got that TAS weekly profile that's saying, I don't know. I might want to go revisit those troopers down at the lows. There was another such great question there, Mr. Bill, and on the fly, we do what we can to answer it. Now, we've got cause and effect. Speaking of cause and effect, you've got Tom O'Brien that's going to be doing a free workshop out here. I don't have the date handy. I should have it handy. All the details are on the home page of TFNN. Where is my date? I know I put it in here. And shoot, if I can't find it. On the 18th, thank you, March 18th. Appreciate that, Bat. You gotta love having wingmen out here, wingmen and women. And so, speaking of cause and effect and price, because this is just kind of feeds right into the question out here. The question being, Steve, if we rebound into the close today or close positive with low volume, is that negative for the bulls? And it can be. It absolutely can be out there, and we'll show you why. But if you want the maestro to teach you, come on over to the homepage at TFNN.com. Free up your schedule on the 18th of March out here, and come on down and party with the gang at TFNN.com. Again, all the details are on the homepage of TFNN. Now, the question out here that Kaz posed, and by the way, we do have a low volume market, or at least we did as of 1 p.m. What do I mean by that? Well, the straight line method of calculating volume at the end of the day, and I don't like to use that end of the day thing, for the Qs would be about 15 million shares. So let's go look at the Qs as an example. So inside the Qs, we're going to do this a couple of different ways out here so that I can correctly answer Kaz's question out here. So as we take a look at the Qs, here is what the Qs have actually done today. We can see this, by the way, we can see this new market profile. When I say new, it formed back on the 23rd of February. But I'm going to go ahead and turn those profiles off for the moment, because if you were just focusing in on the ETFs, and I'm not saying necessarily that that's what you should do, but many of you don't have access to the futures contracts when you really should, because you want to go ahead and you want to be able to understand these different patterns that I teach, David White teaches, Larry teaches, Basil teaches, Daryl Martin teaches, that each of us teach out here, that Andy Heck teaches. Am I forgetting anyone? That Stevie teaches out here. You want to understand all these patterns. This is about price discovery, and when you can fill in the blanks with regard to what the equity futures contracts are doing, it's much easier to answer your question, cause than just looking at the cues. But in order to answer your question with regard to the cues out here, if we take a look at what it's actually doing today on light volume, this is why I say you could answer it both ways. Remember, gaps are absolutely your friend. And if we take a look at, because those are areas where price broke out. And 4 trading sessions ago, inside of the QQQs, they moved higher. It moved higher with 25 million shares. My calculation said we're doing right now about 6.5 million shares. That should equate to somewhere around 15 million shares on the day. Just like we looked at Pan American Silver, right? Pulling back into a breakout area on light volume. That is actually bullish. That's coming back to a breakout area with light volume. That is a bullish message. Hands down, no questions asked, although we ask questions and we look for other indicators to help us prove that. But you now are pulling back with light volume into a breakout area in the Qs. So, Kaz, what I would have to say is really, this is more bullish than it is bearish inside of the QQQ series ETF. Is that kind of making sense to you? And if not, say no, and I'll try to figure out a better way to communicate it to you. You see, the light volume deal would be if you're setting up a B to a C point of an A to B equals CD down. I don't know that we've got that inside of the Q. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, a question that came in, we went through the cues with regard to what it's doing. Hey, what are the SPYs doing? So, in order to answer the SPYs, we've answered a portion of it, which was when we took a look at the ES Mini, right? We took a look at a 2-hour chart. We see that it has a 7th wave pattern, letter G out there. So we know that that can mark an area where you see a significant turn. So that's number one. Number two, we looked at the 30-minute chart that showed a nice price relative strength divergent pattern. That marks a nice little bottom. Now, the beauty about both of those is both from the bullish and the bearish side, if those patterns fail, then that is delivering to you and I a more bearish message inside of the market. So we know what to really look for. So that's cool. We also know that this level of this 2374 is an important area. So if price is able to get above that, starts moving lower, it's something we should be able to anticipate. We are anticipating that. I don't know if price is going to go ahead and take that out or not. In the case of the SPYs, though, if we go just simply leverage the same type of information we did on the Qs, volume right now is 26.8 million shares. Folks, that's not light volume. That is humongously light volume, especially in comparison to the breakout from March 1st. 149 million shares, and we might do 61 million shares, not even 50%. I don't know the exact percentage, 40% or so. Maybe volume picks up at the end of the day. Is today a holiday and I just didn't get the memo on it? No, it's not a holiday. What did the SPYs do? They basically came back and tested the gap. That was the high, in this case, from February 27th out here. It's done it on light volume. It's tested, in essence, the top of its daily box out here. We know that that traveling above that high, which is 236.90, that's bullish message out here for us. So the SPYs are suggesting they're not ready to crack. I will change that opinion if the lows from earlier today get taken out. It is just that simple. Of course, we need to add to our recipe something more than that out here. And that something more comes to us from that SPICE, the volatility index. And if we take a look at it, that is a little stubborn booger, if you know what I mean out here. And when I mean stubborn, I mean it just does not want to get above that 50-day exponential moving average. And when it did for 3 sessions out here, I'm not referring to Jeff sessions, I'm referring to trading sessions out here, price hardly did diddly out here, which in fact that price moved higher, which was making this, I was just beating my head up against the wall. Nonetheless, you can't let go of a play that works. And this play works out here, so we pay attention to it. And that play is, hey, where are you trading in relationship to the 50-day? Because one of the ways, or the way, that you can take a look at the relationship of price and that line is whether or not there's gobs of liquidity. And when there's gobs of liquidity, it's hard to push a good man down. And we've seen that when we take a look at the SPYs and the Qs and volume trying to push its way down out here. Just doesn't have the oomph. It could get the oomph. It should get the oomph. And that's why you're going to pay attention to $11.90. Right now today, we're trading at $11.33. You need to see that volatility. Otherwise, Basil talks a lot about a market that is rotating. That's clearly the message that is going on out here. So that's the level to be watching inside of the volatility index. If I take a look what's going on underneath the covers, meaning the advanced decline information out here, it looks basically horrible. However, and when I say, what do you mean horrible? Give me something to feed on out here. Well, what I mean is that it's trading down below zero inside of the New York Stock Exchange, inside of the NASDAQ Composite, inside of the Dow out here. Those are, that means, the exact meaning, especially today, is that, believe it or not, is that the bears, the sellers, are the ones in control. But these sellers, they may be in control, but they're just are far and few between. Now, here's the deal. Here's the other bullish side of the message, sort of bullish, I should say, inside of the New York Stock Exchange. Let me see if I can just pull up that other chart, just so I don't have to screw around with this one. Not that I mind screwing around with that one, but, man, I've got all this other work. Let's see here. New York Stock Exchange. I should have had it open. New York Stock Exchange, advanced line. Yeah, let's just see if I can do it on this chart. Might be a little bit easier. So yeah, okay. So let me turn a couple. Well, there is a chart I should show you. Here's another chart. Let me go find this one. Although I did post this one inside the Tiger's Den earlier this morning, but many of you might not have been up at that time, and you might not have paid attention to it. This one's had me scratching my head as well. This one right here. So I'll show you a couple. Here is today, as we speak today, there are 52 new 52-week lows inside of the New York Stock Exchange. Now you've got 3,000 plus symbols that are traded inside there. But the point that I'm making here, and that's why you might say, well, geez, Steve, you went through all that stuff and you said earlier you're looking for a top. I am, because there's enough divergence out here that says the sphincter muscle of the bulls has got to be tightening. It should be tightening out here. This is a really unusual pattern. In fact, most don't even pay attention to it. But if we do pay attention to it, we can see that the 52-week new lows has got a nice rising bottom. That means as these highs were being made, the new lows on the New York Stock Exchange was even moving higher. That is unusual. Have we seen that in the past? We have. What happened the last times we saw that? Well, last times we saw that there was a huge gap down back on September the 9th out here in 2016. Price didn't find a bottom until November the 4th. How about the time before that? I'm glad that you asked me that question. Well, the time before that where it became a problem was back on April 28, 2016. In that case there, we saw a low that came in on May 19th, and then eventually a low that formed out here on June the 27th, back on the Brexit day out here. So that is a highly unusual, a very suspect pattern out here. Inside of the New York Stock Exchange, what I was going to show you, what I am going to show you as soon as I turn off a couple of these tools out here, just because, I don't necessarily need to turn it off. Take a look at new highs. We have not taken out with a higher high the level of new highs inside the New York Stock Exchange that formed on December 8th with 485 new highs. The highest we got to as price was making a higher high back on March 10th was 346. That just doesn't get it done. That too is an unusual pattern out here. So it is just a matter of time, and it's trying to time it. That is really the key out here. The advanced decline oscillator reading is minus 136.69. When you get down to minus 150, and we're very close to it, you typically see a bounce or a bottom that forms. Sometimes it's from a little bit less than that. And so this is where the New York Stock Exchange tool indicator to use to truly identify a oversold condition out here. So if you have this tool, you go back and you take a look at it. You're just looking at my charts out here, and you're seeing all these times we get down into this 150 area, and you can see how this can be a little trampoline effect out here, which is really interesting because we're seeing that, and we have seen very little damage inside of these markets. Is it actually preparing for its next leg to the upside? Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So Les writes in. Les, thanks for writing in. He says, hi, Steve. Hi, Les. We are at the 0.618 GDX retracement level. Are we close to a buy? So as we take a look at it, you can see on this chart of the GDX we have, and the 0.618 retracement level, what Les is referring to is the low that formed the swing point low from December 20th. If you go from that very low to that little doji high out here on February the 8th, didn't matter that was a doji, I just kind of slipped that in under the covers there. But to that high, that swing point high, which was 25.71, and you just put your retracement ruler out here, unless it's dead on balls accurate. The actual 0.618 retracement level, which we kind of use as a guideline, is 21.30. The actual low so far, 21.35. So Les is exactly correct. Prices come back there. Now, do you just go ahead and buy a 0.618 retracement? Well, you can, but you'd like to have some other confirming things out here. So let me give those to you so that you could consider this. First, let's do the volume analytics on this. 32 million shares is how this is pulling back so far today. What does that equate to? That's a good question. Let me give you the number. It's 143. So you're at 32.7 million shares. We have been trading. What do we got here? 30. 4.25, we'll put in there. Sorry for the dead silence there. You normally don't hear that from me, do you? So we're going to equate to about 50 million shares today. Friday, this moved lower to 82. The day before, 102. The day before that, 60. So, Les, this is pulling back with light volume. It's pulling back into a breakout area, but it's not really pulling back into what we would call a level of support. You see, remember, gaps are our friends. With gaps being our friends out here, the levels that should have held to have support would have been, the first level should have been 22.25 to 22 even Steven out here. They failed. The next gap doesn't occur out here, which should be a level, a sign of strength, should be a level of support, is 20.45 and 20.32. So, yeah, you're pulling back with light volume, but I don't know. I think it's too risky right here. I'd rather watch to see if price can hold the next level of support. Doesn't mean it won't turn. In fact, we can't say that it won't turn because just as Mr. Bill had pointed out when we were looking at that, I remember Pan American Silver, I think it was, right? If we take a look at GDX, right, the ETF that kind of is the basket of many different mining stocks, you can see we're right there towards the zero line. Right, you can see my little rainbow of lines in the price area coming together out here. And so that being said, we're getting where? We're getting close to a pause point. But a pause point and a buy are two different things out here. Is there anything else that I can see that suggests that we have some kind of bottom on a daily chart? And the answer is no. If I just simply do my wave counts, let's just see what in the heck where we're at there. To the downside, you've got wave number 4. Okay, that's a positive. That's a light positive out here. But is it the place, Les, that I would go ahead and take? I would say no. Instead, what you should do, I can't do that for you during the show here today, but what you should consider doing is going and taking a look at all the mining equities. For example, if I do this and I open up this file right here, I think I have it labeled as mining. That would make sense out there. That would be a winner. Where is it? MP, where is my mining? Here we go. And this just says mining. What I would do if I were you, if you're itching to get in on a long trade inside of the miners, is I would come back and take a look at each of them. You've got like 30, 40 of them individually, and I would look for the ones that have held up the best during this retracement. And here, as an example, I don't know, just out of curiousness, where is Barrick Gold with regard to its retracement? Now, Barrick is one of the there we go. Is one of the top holdings inside of the GDX. Has it also made a 0.618 retracement? And the answer is no, it has not. So, you know, Les, you're talking about wanting to trade the GDX when one of the heaviest weighted stocks, or the heaviest weighted stocks inside of the GDX, has only made a 0.382 retracement. I would think that you would be better off trading this than that. But I would go through each of the stocks and try to identify the ones that have held up best out there. Those are the ones that on even a further decline may continue to hold up better than others. What you really want to try to do is figure out, well, what the heck is going on inside the currency market, right? We know that that is an influencing factor, and I'm not referring to the U.S. dollar index out here. I'm referring to the yen. And if we go take a look at the yen, what you don't want to see is you don't want to see this thing mean and green out here. It's just slightly green as we speak right now. But let's put up our market profiles. This was nothing more today than a test of its TAS daily profile, the top of its box. Les, this is a bullish pattern out here. Price came back and tested support and rejected that. That says the yen can continue to get weaker. On this chart here, if the yen is moving higher against U.S. dollar, it means it's getting weaker. What you want to see, or the correlation that has been out there, it's not a correlation that Stevie's made up. It's a correlation that has been identified, and it is so important. Now I have to go try to find that chart out here. Where did I put that? I'm looking at a different screen. Hopefully I can find this relatively quickly. Here we go. I can find it. Amazing, but true. Here, if we take a look at this chart, here's just a 10-minute chart with regard to what the yen is doing and what gold is doing. Now, in this case, I'm using the futures, so it's the opposite effect. They go in the same direction out here, and the correlation is there. So back to the daily chart that you and I were looking at, really, of the yen, that's not giving you a good signal out here. It's not giving you a good signal that this is the bottom inside of gold, which then you could go ahead and correlate and say, well, this should be the bottom inside of the mining sector. So, Len, I hope that that helps you out. But I believe that is how you put it all together, and happy to put it all together for you. So let's go see what else. Let me go see if there's any other emails out here, any other requests. I don't think there's anything else in the den, but I do see somebody talking about Marissa Torme. So I would like to get in on that conversation, please, out there. But that is for a different time and place. Any other requests? I do not see any other requests out here. So what do we want to look at next? What do we want to look at next? think we kind of covered the markets. We looked at gold, silver, mining. Peter from Park City says, I'm going to assume that's a question. He says the Russell 2000. In the Russell 2000, which is the weak indice out here, and Danny wants oil. Thank you, men. If we take a look at the Russell 2000, the weak indice out here has been pushing lower with less energy. That same pattern that formed out here inside of the ES Mini on its 30-minute chart, don't touch that, honey, is, you've got a nice bottoming pattern. Same thing that we saw inside of the ES Mini. But I've got these little automated trend line tools out here that are on. That's the dark line and the red lines out here. So we can see that there is a shorter term trend line that has been hit inside of the Russell 2000. So that could be it for the day out here. It also formed a TD setup, a little 9 count as it was making its bottom out here. Is it going to be up to the Russell? I don't think so. I think it's going to be up to the Qs or the NQ as an example out here as to where price is headed to. So we'll want to pay attention to that. Let's pay attention to the strong dog out here. And that strong dog, in order to start getting weak, you need to see a close below 53.4875, and preferably this morning's lows. This is Steve Rhodes with TFNN. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So I have a request inside the Tiger's Den from, I think it was Danny in Atlanta. Danny, was that you? Wanted to take a look at oil and wanted to take a look at copper. So let's go take a look at both of those. We got the current copper contract on my screen right now. That is May. And as we take a look at it, you can see a couple of different things out here. We can see a couple of trend lines that have formed. One that was a rising trend line. That's the dark green line on our screen out here. So we can see how that has broken. Broke just a couple of days ago. The area to be watching, Danny, with regard to copper, as to whether or not it's going to change its trend, is going to be the daily profile. That low out here for that profile is $2.65. You're trading at $2.65. So where this is trading right now is pretty important. Now, there's a nice little descending trend line. As the oil doesn't break that, it's now starting to make lower highs and potentially lower lows. We don't have the lower lows for sure just yet, but breaking that profile would be important. That was 265. The weekly, if I just change over to the weekly contract out here, let's see what posts out here. The weekly has, wow, as a brand new profile that formed a couple of last week. Yeah, last week is when that formed out here. Now, the bottom, interestingly enough, the bottom of that box is 262. So that would be the area, if you're long copper, we're in the range where you should be watching for price to find support. And if it doesn't find support there, then that is a problem. In this case here, where would it travel back to? It probably travels back into that November 7th week out here. That's the weekly chart. Let me go back and take a look at the daily. I'm referring right now to copper. Yeah, I'd be looking at the swing point. Actually, I'd be looking at the swing point probably from December 27th in the 246 type area. So I hope that that answers your question with regard to copper and what it is doing. Let's also take a look at light sweet crude. Back 13 pennies. This is trading, I believe it's the April contract. Yeah, it is the April contract where we are trading. And this has just really been a sideways move out here. And I mean sideways. It's been trading sideways since December the 1st, right? So we got December, January, February. We're now into March, nearly 4 months of a sideways consolidation. And I've got no clue as to which way this is going to break. Just have got no clue. I have reasons to believe that this thing is going to crack to the downside. That actually makes sense. This would crack to the downside, and then the markets would follow. But I don't have anything that's confirming that that's really what it wants to do out here. This is the daily chart for light sweet crude. So, Danny, I hope that that helps you out. And hopefully today's show has helped each of you out. And if not, just send me an email. Let me know what it is that you want to take a look at. And actually, you can send me that email today because I'll be filling in for Tom during the 3 to 4 show out there. So, I can be happy to go ahead and take your questions then. So we got a minute left, so let's go take a look at what's going on in the market. So we know what we're really looking at for, right? We're really watching today's lows inside the ES Mini. You know, what are those lows at there right around, what was it, 2367 out here? We knew 23, when we came online, we said 2374, is going to be a tough area, maybe a tough area to get through. Well, we're trading right now at 2374. Yeah, traded a bit higher out here, but it's where it has some significant resistance. I don't know whether it's going to be able to get through this area or not. I just know that it is a significant area of resistance. And so we'll go ahead and we'll take a look at it when we do the 3 o'clock show. So, folks, stay tuned because it is Magnificent Monday. And that means we have our magical, magnificent wonder. That is David White, our favorite polar bear. With Tom being out of town today, I'll do the 3 to 4, and I believe Larry will be doing 4 to 5. Take care, folks, and we'll see you in a few.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.